Welcome and thanks for joining us at EMII.com. Today is Friday, June 27th. I'm Remy Hokie for your Capital Markets Report. Anheuser-Busch plans to reject In-Bev's unsolicited $46.3 billion takeover offer, saying it undervalues the company. This according to Reuters. In rejecting In-Bev's offer, Anheuser-Busch plans to create a restructuring plan that would include the sale of the company's theme park operations. This according to reports by the Wall Street Journal. The plan also would include layoffs, more than $500 million in cost-cutting efforts, and the sale of Anheuser-Busch's packaging unit. This according to the New York Times. InBev is prepared to take its bid directly to Anheuser-Busch's shareholders through a tender offer. And staying with capital markets news, Barclays has filed with U.S. regulators for an offering of up to 266 million new ordinary shares. This according to Reuters. The bank said in a filing with the U.S. SEC that it will use the net proceeds from the offering to strengthen its capital base and for additional financial resources for growth. Barclays says that in the current market environment, it's in shareholders' interest for the bank to strengthen its capital resources through an open offering. And in more capital markets news, Steel Corporation is seeking Australian approval to take a substantial stake in Murchison Metals Limited. This according to Bloomberg News. The Australian Treasury will study Steel's plan to buy a, quote, substantial shareholding and Murchison's assets for 90 days. This according to a government gazette. Steel owns 2.4% of the Perth-based iron ore producer and is offering 1.36 billion Australian dollars for Aussie mining rival Midwest Corporation. Taking control of both companies may allow Steel to speed up the building of mines and a port to export to China. And in other capital market news, UK industrial chain maker Reynolds is raising £5.3 million to fund the acquisition of a majority stake in India's leading chain supplier, LG Balakrishnan. This according to the Financial Times. Under the terms of the deal, Reynolds will pay £5 million for a 75% stake in the Indian business. It will also have the option to buy out LGB's remaining 25% stake after 2 years for a maximum total consideration of £9 million. The deal follows the acquisition of a 90% stake in Hangzhou Shansui, a Chinese chain maker, last June for £2.4 million and fits Reynolds' strategy of increasing manufacturing in low-cost countries. And that rounds out today's Capital Markets Report. Thanks for joining us on EMII. For more details on these stories and much more, click onto our Capital Markets channel online and read the latest developments.